I didn't even know.
Just click got it. Yeah.
So how is the
Autumn, can you tell us if we have a quorum?
we're checking it right now, and let's see. I think that Connecting's not going to be here, is what I was told.
Okay. But I appreciate the call. Okay.
And there's Kale.
So Kale, yeah, I thought you were going to say Kale's here.
Yeah.
Everyone but Mr. Connect.
Okay, I think, looks like we have a quorum. So, let's see, good morning, members of the Board of Finance, guests, and members of the press. I see a quorum, so I hereby call the meeting of the State Board of Finance to order today. So the first item on the agenda is the adoption of the minutes from November the 16th of 2021. The minutes were provided to you via email. Are there any corrections that anyone would suggest to those minutes? Hearing none, do I have a motion to adopt?
So they have to go out off the deck to get down into the yard, and that top deck is still all iced over. They get out there and just panic. You know, we kind of scoot them.
What in the world was that?
So if you are a participant and not speaking, will you please make sure your microphones are muted?
Okay, let me try it again. Do I hear a motion? May I have a motion for the adoption of the minutes of the November 16th, 2021 meeting?
Secretary, this is Eric Munson. I make a motion to accept the minutes.
Thank you. May I have a second?
I'll second.
Thank you. Any changes or any comments to those minutes? Hearing none, all those in favor say aye.
Aye.
Any opposed? Thank you. The next item is the presentation of the Treasury Investment Report by Treasurer Milligan. Treasurer Milligan, you are recognized to present your report. And I'd appreciate it if everybody would mute their mics.
Well, Mr. Chairman, how could I speak if I mute my mic? Thank you, Mr. Chairman. Everybody hear me okay? Hope so. Well, good morning. Today I'm reporting to you our second quarter earnings for fiscal 2022, as well as total earnings for the first half of the fiscal year. During the quarter, which ended December 31, 10-year Treasury rates, which are our biggest indicator of how the bond market is faring, remain stable at around 1.5%. However, inflation rose to 7% during the quarter and the Omicron variant emerged. As a result, the Fed announced its plan to begin tapering of its bond buying program in November and begin doing so in December. Adding to the mix, unemployment rates fell to 3.9%, virtually pre-pandemic levels. These variables made it difficult for investors to forecast how the market would respond. That said, ROI for the second quarter exceeded what was set forth by this board at our last meeting. Total revenue for the second quarter was $14.4 million compared to $8.39 million for the same quarter 1 year ago. With this last quarter's receipts, we've already fulfilled our obligation of $20 million to the state's highway fund for FY22. Our target book return that you all set at the last meeting ranged between 7% and 8%. I'm sorry, 0.7 or 0.8%. That would be nice if we had that other I just said. Our actual book return for the quarter was 0.839%, exceeding the established target. I've included in your packet a quick breakdown that shows total quarterly revenue by security type. The majority of our receipted earnings came from our long-term portfolio. This portfolio earned $13.8 million during the second quarter compared to $7.4 million for the same quarter a year ago. The two biggest reasons for a nearly double increase over the last year are, number one, 10-year Treasury rates have risen almost to pre-pandemic levels. Number two, we're seeing additional state revenue come in. We have also continued to reinvest principal return from our mortgage-backed securities into higher rate producing investments. Additionally, the yield curve shape is positively sloped, as you can see in this chart, which means longer term investments generate higher yields and higher returns the further out on the curve you go. Reinvesting principal we receive from those mortgage-backed securities I just mentioned has allowed us to benefit from higher yields and increase our income potential. Our short-term portfolio, which consists of demand and money market accounts as well as commercial paper, earned roughly $604,000 during the first quarter compared to $961,000 during the same quarter last year. With the Fed keeping rates near zero for the majority of the last 2 years, this portion of our portfolio has not been able to produce much yield. The Fed's recent decision to raise rates should eventually revive these markets for the state's short-term investment portfolio. Here's a snapshot of our total portfolio allocation as of December 31, the end of the second quarter. You'll see the percentages of our portfolio broken down by the various investment categories that we participate in. And I'll pause here for just a moment to let you look at the chart. Following that is a chart that shows the historical earnings of the state treasury going back to 2010. You'll see our half-year totals for 2022 are $27.5 million. This is roughly 77% of the total we earned during all of FY21. The total amount we've earned for the state during my administration is now over $456 million. As we look toward the remainder of the fiscal year, much of the data we're seeing, low unemployment, new job creation, the Fed's intention to raise interest rates and wind down its bond buying program would suggest that we will see higher offering rates within the fixed income sector. However, with the uncertainty surrounding the ongoing pandemic, continued supply chain demands, inflation at its highest level in nearly 40 years, investors are questioning how the market will respond to all these variables. Meanwhile, our strategy remains steady and unwavering. We continue to maintain an active presence in the bond market, finding small yet significant securities that we can invest in while still maintaining a conservative investment structure. Our priorities remain the same: to do the best that we can to ensure the safety of the state's $5 billion investment portfolio, to ensure we have enough liquidity to pay the state's bills, and finally, to ensure that we get the best return possible. Mr. Chairman.
Thank you, Mr. Treasurer. Does anyone have any questions or comments that they would like to present to the committee or to the treasurer? Okay, hearing none, may I have a motion for the acceptance of the treasurer's report?
So moved.
Second. Thank you for the motion. Do I have a second? I don't hear any second.
Look at the screen. We're raising our hands.
Okay. Thank you. All those in favor say aye. Aye.
Aye.
Any opposed? Okay, thank you. We have our The next item of business is our normal housekeeping items. As chairman of the board of the State Board of Finance, I make a motion to the board that no funds are available for deposit into the State Board of Finance Certificate of Deposit Program. And I need a second to that motion.
Susanna Marshall, second.
Thank you. Any questions? Hearing none, all those in favor say aye. Aye. Any opposed? As chairman of the State Board of Finance, I make a motion, the board direct the treasurer of the state to purchase warrants for the succeeding quarter, that is April the 1st, 2022 through June the 30th of 2022 pursuant to Act 1088 of 2013, and to keep reasonable amounts in demand deposits and money markets during the next quarter for the transaction of the day-to-day activities of the state. May I have a second, please?
I'll second that.
Thank you. All those in favor say aye. Aye. Thank you. Okay, the next item is the total rate of return. Total return on a book return. I'll get it right in a minute. Total rate of book return. Third quarter of 2022, January, that's January the 1st, 2022 through March the 31st of 2022. For the presentation, I recognize Steve Kilgore, Treasury Director of Investment and Accounting, and Robert Romack, get it right in a minute. Treasurer Senior Investment Manager. You have the floor, gentlemen.
Okay, thank you. So you may have a handout with some pie charts on it, and it discusses and summarizes book return so far this fiscal year. On a book return basis, in the first quarter of the year, we earned 0.73%, and in the second quarter, 0.839%. So it's been discussed, as interest rates have risen, as we reinvest our funds, we're able to earn a little bit higher return. On a total return basis, as interest rates rise, then the market value of bonds declines. So the opposite result occurs or can occur. Total return in the first quarter was 0.08%, so positive, but negative in the second quarter, negative 0.259. So as we're able to, the market value of bonds declines as interest rates increase, but on a cash basis, as we invest funds, we're able to position ourselves for better returns on a cash basis in the future. Robert?
Well, I appreciate that, Stephen. So I wanted to establish a new target rate of book return. So for our Fed Fund future currently predicting 5 interest rate hikes for 2022. A robust January jobs report and continued steamy consumer price prints bode well for higher path for interest rates in the medium term. We therefore are increasing our target rate of book return for the January through March period to a range of 0.85 to 0.95%. And that's from a target range of 0.7 to 0.8, which the treasurer mentioned earlier.
Okay, do you have could you summarize your recommendation that you want the board to approve, please?
Yeah, the recommendation is to increase our target rate of book return to 0.85%, a range of 0.85% to a range of 0.95%.
Okay, thank you.
For the quarter of January through March.
Okay. Are there any questions? Do I hear a motion? May I have a motion?
If I understand correctly, he was requesting just for the first quarter. Is that correct?
That's correct.
I so move.
All right. Thank you, Auditor Lee. May I have a second, please?
Second.
Thank you, Cal. All those in favor say aye. Aye.
Aye.
Any opposed? Okay, good, thank you. So the next item of consideration of the new book brokers, to present the list, I recognize Robert Romanock, Treasury Senior Investment Manager. Robert? Robert? Robert, I do not hear you. I don't know if anybody else does.
Can you hear me now?
Yeah, I can now. Please proceed.
Okay, great. So we are introducing two new dealers to our state approved list. The first is Academy Securities. They were a veteran and disabled veteran owned and operated firm with solid depth in capital and fixed income markets. They've shown strength in the short-term commercial paper and government sectors where supply constraints have made it challenging to find value. We believe that there'll be a good addition and a resource for us in the coming months ahead. And the second group are Great Pacific Securities. They're a full-service institutional broker dealer trading domestic and international fixed income equity securities, and they also provide investment banking services as well. They've also shown depth in short-term markets and have consistently offered bonds cheap to some of their larger competitors. We believe that they will be able to specifically assist us with sourcing short maturity and less traffic debt. We think that's going to be an important complement, given that we're about to approach a rate hiking campaign by the Fed. And so the short-term market is going to become more important in the months ahead.
Okay, so you're recommending the addition of two new proposed dealers, is that correct? And that's Patrick Hackett and Brian Merhar, is that correct?
That's correct. Academy Securities and Great Pacific Securities are the two.
Okay, additions. Thank you. May I have a motion for the addition of those two proposed?
Mr. Chair, I have a question, please.
Okay, go ahead. Commissioner Marshall.
And I will be happy to make that motion with a request. I spoke with Treasury staff yesterday regarding a recommendation to perhaps date this list going forward so that we can always ensure that we're working off of a current list with some type of, tracking environment there where we have modifications, changes, just so that we'll always be able to know that we are working off the most current and board approved list.
Okay, is that correct that this list is not up to date?
No, sir, I'm asking for a date to be placed on the list going forward so that we can track this and ensure that it matches up with what the board approved. And did you make the motion also? I was gonna say with that amendment, if that so pleases the board, I'll be happy to make the motion that we approve the two proposed dealers, Academy Securities and Great Pacific Securities, as of today, February the 8th.
I believe that's a reasonable recommendation. Is there a second?
Eric Munson, I second.
Thank you, Commissioner Munson. Any further discussion?
I have a question, Mr. Chair.
Okay, go ahead.
Are we just voting on the two new entities, but not the others listed above?
The others have already been approved, is my understanding.
So they don't have to have an annual approval?
No.
Okay, thank you.
And Secretary Fetcher, that's kind of my thinking that we'll know that those are our ongoing approved list and we're working with. Anytime that there's a date on it, we'll know that that's a total list at each, board meeting.
Thank you.
Thank you. So all those in favor say aye. Aye.
Aye.
Any opposed? Okay, thank you. Let's see, where are we? Got the new broker list. The next item is the state Treasury investment policy changes. These changes were presented to the board at the last meeting and are listed on the agenda. To further discuss these items today, I would like to recognize Grant Wallace, Chief Deputy Treasurer, and TJ Fowler, Treasury Legal, Chief Legal Counsel. So, gentlemen, you have the floor.
Thank you, Mr. Chairman. And I do want to go ahead and before we get started, apologize to the board for the late draft. We wanted to be sure that we included all changes that were presented to us. And that took us a little bit of extra time because we did get some early yesterday morning that we wanted to get incorporated for review by the board for today's meeting. We do appreciate the feedback and input from all groups, and especially the Arkansas Bankers Association. They provided some invaluable resources and feedback for us. Hopefully, everybody has seen that this was a better process and has produced a better policy by which our office will now be able to work from. As this was a holistic review, we did also incorporate a lot of formatting changes that are the bulk of the changes that you will see in here to be able to comport with new state laws. But I'll turn it over to TJ Fowler to go over the specific structural changes and the significant changes that were made so that the board can discuss those further.
Morning, everyone. TJ Fowler, legal counsel for the Treasury. The red line that you received last night has three major categories of revisions. And as Grant just said, the first main category is simply stylistic changes to comport with the new Code of Arkansas Rules Style Guide. And anywhere I made those changes, I tried to, out in the comment section, note the section of the Code of Arkansas Rules Style Guide so you know that that's what you're looking at there. It's just a new creation by legislative research. All board rules are going to have to follow this style guide starting next year, and I figured we could just get a head start if we're already doing a rule revision. The second category of rule change is the actual substantive changes that expand the Treasury's permissible investments. Those changes y'all received at the last board meeting, and those have not been substantially changed in this latest revision. There are six main categories of those changes. The first is on pages 6 and 7 of the red line, addressing commercial paper. Previous versions of the rule limited the Treasury's purchase of commercial paper based on ratings. The lowest permissible ratings were A2 and P2, which had a duration of 90 days, and A1, P1, which had a duration of 180 days. Various versions of the rule struggled with which rating agencies to use, and this proposed change removes the 180 90-day maturity limit. It's been told to us by both our investment team and by outside consultants that those limitations are really unnecessary since there's no such thing as a CP offering with a duration longer than 270 days. And this move down to these second tier commercial paper by any two rating organizations isn't substantially different than what we had before other than the duration. All the limitations that y'all created for commercial paper in the last couple of years can't be more than 30% of the portfolio. Second tier can't be more than 5% of the portfolio. Those all remain in place. The second category of change is to the corporate bonds. And it's very similar to the changes to commercial paper. Previous versions limited corporate bonds to either A- or A3 for 1-year duration instruments or AA- for longer durations, and it wasn't actually limited other than by the 10-year maturity for all instruments in the portfolio. This simply brings the rating down to investment grade, which again is the recommendation from the outside consultants for this modern portfolio theory. The third change is on page 8 of the red line, has to do with municipal bonds. The current rule only permits the Treasury to purchase general obligation bonds of states of the United States. Arkansas, Alaska, the actual state itself, doesn't allow purchasing general obligations of counties or municipalities. This change would permit general obligations of those smaller subsets of government as long as they hold an investment grade rating. This change just mirrors the language that's in the controlling statute, Arkansas Code Annotated 193518. It still would not allow revenue bonds. This is only general obligations. So it's not just pledged revenue. The debt is protected by the entire obligation of whatever the underlying entity would be. The fourth change addresses investment pools. This is on page 8 of the red line. And frankly, this is something that's already permissible. If the Treasury is allowed to buy a single unit of an asset, then common sense dictates that it's allowed to buy a pool of those assets. This revision is simply cleanup language prompted by legislative audit to ensure that there's no ambiguity in the rule. The next category of change has to do with durations for the Treasury, both per asset class and as a whole. Those are on pages 8 and 9 of your red line. There are three main changes there. First, the total portfolio maturity limit will be measured as a weighted average maturity as opposed to straight average maturity. Obviously, that would only affect those asset classes which have a weighted life. Second, treasuries and agencies will be exempt from the 10-year per individual asset limitation due to their extreme creditworthiness. So this is only affecting federal treasuries and agencies, and they would still count against the total portfolio maturity limit. So if you're buying a treasury that's greater than 10 years, it's going to have an impact on the limit that our entire portfolio cannot be greater than 10 years, and it's going to require more short-term purchases to offset. The final change there is that CMOs and mortgage-backed securities will be limited to a 15-year average life. They're currently limited to a 10-year average life. This is actually one of the places where there was a change in your most recent markup that you received last night. Anywhere that there's a change that is different from what you saw 3 months ago, I've tried to make the font blue out to the right in the comment. The ABA saw this change, the Arkansas Bankers Association, and it was requested that we put a limitation on those CMO and mortgage-backed instruments that are greater than 10 years, but obviously still less than 15. And so that sentence was added that says, U.S. agency mortgage-backed securities and collateralized mortgage obligations, which have an average life greater than 10 years, shall not exceed 5% of the total portfolio at the time of purchase. The final change that is substantive is on page 13 of the red line. This is the removal of a table, and it's important. Can you stop scrolling for a second, scroll back up? Right there is an important thing to note. The section 3 of the policy only addresses the state treasury certificate of deposit investment program. Now, as this board probably knows, but it bears explaining, this is the program that y'all vote on each of these motions to say there's no money available. During my tenure and since Act 1088, I don't believe this program has ever been used, but the program essentially allows the State Board of Finance to directly make certificate of deposit investments if they so choose. If you would scroll down to page 13 now. So this table it's sort of a leftover from an earlier time where CD rates were more stable, and the State Board of Finance in the policy would set those rates as part of the policy. This same table appeared earlier in the policy for the CDs purchased by the Treasury. That was omitted some years ago because, as y'all know, these rules have to go through the APA process, and that process has a delay of 6 to 9 months. What was happening was this board was setting those rates, and by the time those rates became effective, they were obsolete because the market had changed so much. This change is simply doing the same thing for their certificate of deposit investment program that has not been used in 8 or 9 years. That's the totality of the substantive changes. The reason for the late email last night is because the Arkansas Bankers Association and a couple others had some other recommendations. Those recommendations, and I'm sorry I didn't have time to come up with an outline to show you, but if you'll scroll back up, please, Stacy, we can catch them with the blue ink on the side. So here you can see that the Bankers Association requested that we make it clear that if the Treasury were to hire an outside money manager to make investments on the Treasury's behalf, those investment purchases would be limited to the same asset classes that the Treasury is limited to. Frankly, that's already the law. The Bankers Association wanted it to be belt and suspenders in the policy, and we were happy to oblige. If you wouldn't mind scrolling up some more, and we'll catch the next one. So here's one, that's the one we discussed earlier, so we can keep scrolling. That was the one that limited the 5 to 10 year mortgage-backed securities. And then we had a couple that were actually at the request of Commissioner Marshall, and she can obviously speak to those more. But she requested that the State Board of Finance review this policy annually, even if there's no policy change, just so the board's, keeping current on it. If some board member has an idea, they have the opportunity to voice that idea, and there's something spurred on, and we thought that was a good idea. If you wouldn't mind scrolling up a little further, there's one more. No, go back down. This is what Commissioner Marshall was discussing earlier. She would like to make it clear that the Treasurer of State has to maintain the approved broker-dealer list that y'all recently voted on. And we've already internally talked to our investment team, and they're going to formalize that list a little more so you can see revisions, you can see dates on it, and that way someone will be able to track when brokers come on or off of the list. We're also going to have it on the website so that, God forbid, a board member is reading the morning news and there's some headline about a broker that's negative. They can quickly access that list, find out if that broker dealer is on the list, and then, ask to call an emergency meeting if need be. I think there may be one more if we scroll up, but yeah, there is. Here, we had added a definition of a nationally recognized statistical rating organization, just so it was clear for the changes we discussed earlier to commercial paper and corporate bonds. That was in the red line that y'all received at the last meeting. However, Commissioner Marshall thought that we needed to add a sentence to add clarity. That sentence is, in the investment grade definition, it makes it clear that each nationally recognized statistical rating organization uses different nomenclature. So for example, when you're talking about commercial paper, one rating organization may use A1 while another may use P1. Just makes it clear that we're talking about second tier corporate debt from any of the NRSROs. And then I also need to say thank you to Commissioner Marshall. Right above that, she caught one of my typographical errors. So, and those are all the changes, I believe, in this rule. If anyone has any questions, I'm happy to answer.
Okay. See. I suppose we don't have to vote on these separately. We can just vote on the changes as you have presented them in the totality as a batch.
Yes, sir. I believe you can if that's what the board so wishes.
Okay. Is that?
I have a question before we go to a motion on that.
Okay. Well, let me ask you, are there any objections with the to do a batch vote? Okay. Any questions with regard to the recommendation of the proposed changes?
Is there a reason we're voting on them now in a draft form? What I heard TJ say is they don't have to be completed this quarter. We could wait until the next meeting and have it totally cleaned up, but I may have misheard that. So I'd rather see a clean document personally before we vote on it, unless it's time sensitive. My understanding is it just BLR is working on this. It's a big, long project and we still have time. But TJ, what was it you said of when we did?
I think there's a couple issues there. I think what you heard me discussing was that Code of Arkansas rules, which is the stylistic changes where I have to change state treasurer to treasurer of state, where I have to change will to shall, where I have to have a certain nomenclature when I reference the Arkansas Code. That's all. I've followed those Code of Arkansas rules and they're ready to go. We just aren't legally required to implement those rules until next year. What may be more time sensitive are the substantive changes that I went over that would impact what the Treasury can and cannot purchase regarding asset classes and duration. All of those changes were presented to the board at the last meeting 3 months ago for exactly the purpose that you outlined. I think there was some concern that a lot of times these rules were being presented and you were being asked to vote on them. Hopefully everyone's had time to digest the substantive changes now that we've had those 3 months. The only thing that is new today are those 5 issues I just discussed at the end that were in the blue lines from Commissioner Marshall and then from the Arkansas Banking Association. And I don't want to, not to put my spin on them, but they all seem pretty reasonable. And they're not substantive at all to the actual investing of the state of Arkansas. Does that answer your question, Auditor?
It does. Thank you for that clarification.
PJ, with regard to moving this forward, if we agree to it, will, with the fiscal session starting next Monday, does that create a problem, or how will you bring these before the legislature?
Yes, it does create a problem. Historically, when the legislature has been in session, they have not had the ALC committees required to move rule changes through the Administrative Procedures Act. I think the silver lining for our timing right now is that we still have to, if the board approves a rule change, we still have to get the approval from the governor's office, and then it has to move through the comment period, which requires 2 weeks of publication that we've used the Democrat Gazette in the past, then the 30-day wait period for comments, and then the comment meeting at the end of that. By the end of that, I would hope that the special session would be over and we would have those ALC subcommittees back in place. So hopefully we would be closer to the 5 to 6 month wait on the APA as opposed to the 9 to 12 month that we've had in the past when we've had to wait for a session.
Thank you very much on that. Are there any additional questions? If not, I would entertain a motion for the acceptance of the changes to the investment policy. Who was that? Did somebody make a motion?
No, but I'm happy to, Mr. Chair. Commissioner Marshall.
Thank you. Thank you, Commissioner Marshall. Do I have a second?
I'll second.
Thank you, Secretary Fetcher. Any additional questions or comments?
Yes, this is Eric Munson. I would
Yes,
I would
sir.
appreciate in the future that we'd had more time to review these when we have last minute comments like this, as stated earlier.
Okay,
But thank TJ for reviewing this.
thank you. Okay, all those in favor say aye. Aye.
Aye.
Any opposed? Okay, thank you. I think the next item is the Chief Compliance Officer report, and I recognize Alderman Sampson to give her report.
Thank you, Mr. Chair. Thank you. Everybody should be able to hear me. Over the past quarter, I've continued to educate myself on risk in government operations. This process is really an ongoing task in an ever-changing, ever-evolving government atmosphere. I believe that based on this education, identifying risk can help the office achieve the goals they have set. The risks identified include legal risk in following state and federal laws, operational environment, which could be services provided or software that is needed for day-to-day activity. There's also political risk, which can be caused by legislative activity that can affect the office. Market trends, interest rates, and cybersecurity also play a big role in the risk profile. After risk identifications are made, the office will need to decide how to address those risks, which could include a variety of responses. The office would need to take preventative measures to control risk through employee training and guiding policies. I want to continue my education on internal risk and learn the proper policies and ways to implement risk control and prevention in the Treasurer's office. And of course, that will go forward throughout the year. And that's all I have. If anybody has any questions.
I do, Mr. Chairman.
Please. Auditor.
Where are you finding the classes that you're taking, Autumn?
That's a great question. I'm a member of the Government Finance Officers Association, and the Treasurer's Office pays for me to have that education. But then a lot of the the best practices, things like that, just come with the membership. So I'm able to read and take courses at my leisure whenever I can on this type of policies and procedures.
Mr. Chairman, have we set up a number of hours requested? For example, a CPA or a CIA does 40. Well, I think it's 40. It might be more than that. Gail can tell us. Have we set up a guideline for Autumn of, I don't know where the feedback's coming from. I'm sorry about that. It's not
I'm
here.
getting a lot of feedback on your comments, but I think I understand. Your question is, do we have a schedule of, or a requirement, a certain number of hours of training each year? Is that what you're asking? And
Yes,
no,
sir.
we don't. We do not have that, but that may be something we need to consider.
And I don't know if we required a certification from Autumn. I don't remember if we looked that out initially.
I don't know either. I don't know. Autumn, do you know of a certification that's been required based on the position you have?
No, I know at one time that we really did not know what certification or what particular association would even be affiliated with the compliance role. So I think there was just some confusion, not necessarily confusion. We were just trying to figure out what particular certification and continuing education hours that would be put in place for that.
Okay, we do that in our office a lot. We have a CIA, CPA, as well as we go to lots of compliance seminars. I will gladly share with you what we're doing, and I think it might help. I think it would be good to set up, if Autumn is not a certified internal auditor or certified compliance manager, I think it would be good for us to set up specific guidelines to get her to that level. And I would just put that out there for you, Mr. Chairman, but I will gladly share with Autumn and the Treasurer's office some of the things we go to. Thank you.
That's an excellent idea, and let's follow up between now and the next board board meeting. Okay. May I have a motion to accept the report of Autumn Sampson, please?
I'll make a motion.
Okay, I believe, okay, thank you. Do I have a second?
Second.
All right, thank you. All those in favor say aye. Aye.
Aye.
Okay. The next.
Can we circle back to the
Hold
money
on.
management?
Okay. Chief of Staff Grant, did you have something that you would like to talk about on the money management issues?
Yes, forgive us. There were some changes that mirrored the changes to the Treasury investment policy that we needed to review and get approval for the money management investment policy. And I'll let TJ just go over those one more time.
So
Missed that. Okay. Or did I not go for, I didn't let y'all talk enough. So, all right, please proceed.
I apologize. So the Money Management Trust, as the board knows, is the local government investment pool that the Treasury administers. It uses, in some ways, identical rules to the Treasury's general investments. In other ways, it's different because the duration is much shorter and it's a liquidity fund. There are proposed changes to the Treasury, the Money Management Trust, that are identical to what you just voted on. Those are limited to the commercial paper change, the corporate bonds change, the GO bond, municipal bonds, and the investment pool. So it's only those items that were substantive in the permitted investment section. It does not have any of the changes for the duration that were requested in the investment policy, because it has a much shorter duration and they just wouldn't work. So it's essentially what you just voted on, but a much more scaled down version for the local government investment pool. I'm happy to go into more detail if anyone has any specific questions, but because it's identical, I'll try to be brief.
Are you through with the explanation on those changes?
I'm sorry. Yes, sir. I'm through for now unless anyone has any more questions and wants me to go into any greater detail.
Are there any questions? Okay, I would entertain a motion for approval.
Susanna Marshall makes that motion.
Okay, and a second? Kale?
Second.
Thank you. Any additional questions? Hearing none, all those in favor say aye. Aye.
Aye.
Any opposed? Okay. Let's see. Are there any other items that we need to discuss with regard to the treasurer's report of the Treasury? Because if we don't have any, we're going to move into another area of responsibility of the Board of Finance, and that's the Employee Benefit Division. Okay. I guess to begin this discussion, I want to turn the meeting over to Jake Lee, the EBD Administrator.
Good morning, everyone. Can you hear me okay? Great. So first off, I apologize in advance for the sheer volume of material that I sent to you all last week. We've been working very hard with the Bureau of Legislative Research, with the Arkansas General Assembly, and with our vendors to keep the business of the Employee Benefits Division moving along. The purpose of today's meeting is to bring you up to speed kind of on where we're at. There's a lot to go over and a lot to discuss. However, I understand that we've got a little bit of a time constraint. I don't want to move too quickly on anything. So if at any point anyone needs me to stop or anybody wants to ask any question, there's lots of details we can go over as we go through this. But we have today 5 different items for discussion. 4 of those items will require the approval of the board. So I will be, or the chairman will be asking for a motion on those. We do recommend approval of all of those items, but we can go through those one at a time. The first item that I'd like to discuss is not an approval item, and instead it's a discussion of some of the various pieces of legislation that we've been working with the Arkansas General Assembly on, and which will be considered either in the fiscal session, which starts next week, or at a special session to be held at the end of the fiscal session. All of these are pieces of legislation that deal with the Employee Benefits Division. All of them will affect the operations of not just EBD, but the Board of Finance. And so I wanted to take a moment to go over them with you. Without getting into too much detail, there is a one-pager that addresses each of the individual bills. I don't know if anybody's had a chance to look over those bills, but there are 1 or 2 that I would like to highlight for your attention. In particular, one bill is ANS 500, and that's the designation the Bureau of Legislative Research gives to bills before they are filed. When that bill is filed, it'll get a bill number. But that deals with the governance structure that would sit over the Employee Benefits Division. As many of you are aware, the proposal from the legislature would keep responsibility for the day-to-day management of the EBD with the Board of Finance. The board would have the support of 2 advisory subcommittees, one for the public school employees and another for the state employees. I think the design, the idea is that those subcommittees would really do a lot of the heavy lifting, do a lot of the analysis and a lot of the research, but all of their actions would then be submitted to the Board of Finance for a review and approval. ANS 500 would also eliminate the 3 existing subcommittees that we currently operate under, including the Drug Utilization and Evaluation Committee. That raises the challenge of how we're going to manage our formulary going forward. But that's a question that I think that we can figure out as we move forward with the governance structure and also with the additional RFPs that we'll be putting out for our pharmacy benefits manager. In addition to the governance structure, the package of legislation really addresses a lot of concerns. I think it's a really good package generally. We will have additional funding provided, particularly on the public school side. TNL 425 is a school funding bill. Without getting into the kind of details and the nuance of school funding, that really, I think, will address some of the adequacy concerns and pump a lot of funding over into the public school side. As you all know, that's really where a lot of our challenges have been felt. It would also require that retirees have membership of 5 years cumulatively before they retire, before they could get retirement benefits. It would require a fiscal impact statement be filed before any bills are filed in the General Assembly. Right now, there's bills that get filed that will have a big effect on EBD and have been passed through without a lot of look at really what that effect is going to be, and then in turn, how that's going to be passed along to the taxpayers. There's also a mechanism that would be put into law for funding triggers, kind of a sort of gaslight that would appear on the dashboard if our reserves go too low. And additionally, a bill that would mandate the coverage of bariatrics surgery for morbid obesity and some of the kind of ways that that'll work. All of these bills would, in one form or another, require some kind of action on the part of the board. So I want to make you all aware that these bills will require some additional business in the future. One of the bills would establish a permanent subcommittee of the Arkansas Legislative Council. That subcommittee would review all the actions the Board of Finance has taken. I think currently the Personnel Subcommittee is doing that. This would be a new subcommittee dedicated to EBD. We worked with the General Assembly to make sure that the Board of Finance has a role in that process and that there's a kind of clear chain of command in how those decisions are reviewed and then ultimately approved. So that is the package and probably a little speedy summary. I'll pause here if anybody has any questions or wants to discuss anything.
Mr. Chairman, I've got a statement about it. I don't think Mr. Bleed can answer my question. So my concern is anytime government gets involved and creates another layer, there are issues. I think that's been apparent the last couple years, very apparent. And my concern when I did my initial read through of the bills is, okay, now we've got a group that's going to study the teachers and the employees, and then they're going to give theirs to the EPD. And then you've got the ALC committee over here doing their thing. And then you've got the legislature that in the end says, we don't like it. So I'm just expressing that no one can do anything about it. The legislature is going to pass what they're going to pass. But that's my big concern with this. All we've done is create another 2 layers, the ALC committee. Well, I'm not saying we created, obviously, if these bills pass, which it's apparent they will. We've created 2 more steps. Granted, we got rid of the subcommittees existing in EBD, but created the ALC committee, created 2 other committees. I just see it as being problematic and has the potential of I should be positive here. It's 2022, it's a new year, that maybe it has the potential of it running more smoothly. I don't have that hope and faith. So I just wanted to express that. Obviously, nothing any of us can do about it except give our opinions. And I just gave mine. Thank you, Mr. Chairman.
Thank you for your comments. Jake, with regard to when this might be implemented or become law, is it expected to be placed on the agenda for the fiscal session?
The question of the hour.
So the 2 options would be, it would be considered for a fiscal session. Of course, these would not be fiscal bills. And so the way fiscal sessions work, the legislature would have to introduce a resolution on the first day of the session and vote through to consider non-fiscal bills. The alternative would be that these bills would be placed on a call for a special session.
And that hasn't been determined at this point in time. They have the bills written, so they could do it. They could ask for a super vote and have it placed in the fiscal session is what you're saying. Okay.
Mr. Chairman, I'll just make a comment that the latest I heard from the governor's office was that he was working with the leadership and there most likely would not be a special session. We all know that's ever changing. So I interpreted that to be, it would be part of the fiscal session.
Thank you, Secretary Fetcher. The other, one other item that just kind of, as I have been reviewing this, that concerned me was the relationship of the Board of Finance to EBD. And it's not clear how that relationship will be implemented as these bills are implemented. But it would seem to me that we would be well served by having a close relationship with EBD as the issues move through the Board of Finance and we're making decisions. I consider the expertise of the EBD to be the expert in this area. And your recommendations or your comments to the Board of Finance will be extremely important as we move through 2022 and 2023.
I agree that EBD has to play a very strong role in supporting the Board of Finance through all of this, not just through the subcommittees, but also through the board itself. And in response to Auditor Lee's comments, I don't disagree with that necessarily, but as an alternative to where we're going now, in the past, the board and EBD were really kind of out on their own. And so I think this is part of our general plan to bring them in, make them kind of part of the superstructure of state government, part of the budgeting process, part of the review and the oversight process. Is there a little more maybe than perhaps is going to be needed in the long term? Maybe. But I think in the short term, there's a lot of concern across the street from the General Assembly, and they want to keep a close tabs on that. And given the amount of money that we are talking about putting into it, I don't think that that's not justified. I mean, I think that makes sense. I think it puts a lot of burden on EBD to make sure that we are all communicating and all working together. And that's certainly something that we're going to be working to do.
I think it's very important. I agree that you guys have a very good relationship with the legislature, because I don't read these bills as they are not clear as to who you guys answer to. I mean, I think you guys have a heck of a next couple of years in navigating that.
And we've really worked with the General Assembly to make sure they understand the role the Board of Finance plays. We're under law responsible to y'all. We are certainly see ourselves as being a service unit of the Board of Finance at this point. You've done an excellent job over the last year to really put some really important decisions in place and so put some pieces in place that I think will support the plan over the long run. And, we'll get down to it later on, but there's places in the bills where it referred to EBD's responsibilities. And we had to say, you know what? I don't really have responsibilities as EBD without the Board of Finance. I need the Board of Finance approval before we really do a lot of things. So we've tried to make sure that the role of the board is clear and that there is a clear chain of command kind of in how these decisions are going to get made.
Thank you, Mr. Lee, for those comments, and Auditor Lee, thank you too. Are there any other comments or questions from any of the other board members? Okay, hearing none. Mr. Bleed, I would suggest we move to the Drug Utilization and Evaluation Committee and what that recommendation is.
So the Drug Utilization and Evaluation Committee has met. They meet regularly to review different drugs that have come on the market, as well as different research into the efficacy of existing drugs. And they make recommendations to the board on our coverage, which drugs do we cover and under what circumstances. I have attached the board's report. It provides details on specific drugs that were brought for consideration, as well as the decision of the board on whether or not to cover those drugs. As well, Dr. Hank Simmons and other members of our staff are on the call to answer any questions on the specifics of those drugs. We would recommend approving this report.
Okay, I think that you provided that to the board.
Yes, sir. That is in the board material. The 70 odd pages that I sent. I think it is at the top, the first document.
Okay. Are there any questions from the board with regard to the Drug Utilization and Evaluation Committee Board report and recommendation?
Are you specifically speaking about the second review or the new drugs, or are you speaking about both, Jake? You've got old business and new business. Had we already put to bed the second review? Which one are you talking about?
I think we were talking about the report in its entirety, but
Okay.
Dwight or Mike, are you on? Or Hank?
Yes, Jake, I'm on. Just for the record, I'm Dwight Davis, Director of the Evidence-Based Prescription Drug Program at the UAMS College of Pharmacy. And we advise the DUEC. This report would be in total. On occasion, we'll re-review drugs that we've reviewed in the past as new evidence services. So this report would be an all-inclusive in-block recommendation to the board.
Thank you, sir.
Thank you. Any other questions? Hearing none, do I have a motion for the approval of the board report?
I'll move to approve the report, Mr.
Thank
Chair.
you, Secretary Batcher. Do I have a second?
Second.
Thank you. Any questions? Hearing none, all those in favor say aye. Aye. Any opposed? Okay, Mr. Bleed, let's move to the memorandum of understanding with the Bureau of Legislative Research.
Thank you. So the Bureau of Legislative Research and the General Assembly have hired a consultant, the Siegel Group Incorporated, to review the operations of the Employee Benefits Division. They've been doing that for the past year. And at the conclusion of that report, they made a variety of recommendations, including that the state through EBD procure two different services. First, a Medicare Advantage plan, which would provide Medicare Advantage services to our retirees. And second, a new contract for our pharmacy benefits manager. The Bureau of Legislative Research has recently signed a contract with Siegel, where Siegel will provide some of those support services. They provide RFP services in other states where they actually write the RFPs, they manage the contracts, they have expertise in putting into those contracts language that they think is necessary to guarantee certain performances and certain returns. That's a contract between the Bureau and Siegel. The Bureau then has brought to us a memorandum of understanding in which we would agree to assist or to accept the assistance of Siegel in writing those RFPs. The RFPs would still be the responsibility of the Employee Benefits Division. Those RFPs would still come before the Board of Finance for review and approval. But by entering into this MOU, we would be able to utilize the services and the expertise of Siegel in drafting those. In particular, on page 3, I want to make it clear that we have added language to this MOU, making it clear that we would seek the approval of the State Board of Finance of any action EBD determines needs the State Board approval, and that the ultimate issuance of language of any procurement for these services is the responsibility of EBD and the State Board of Finance. This is something that we will be bringing to you all at another meeting in the future as these RFPs are drafted and as we start moving forward towards taking bids. And with that, I would ask the board's approval on the MOU.
Do you have any questions from the board?
Yes, I have a question. Did the legislature renew their, I mean, I thought Siegel was a limited contract just to advise on moving forward. So apparently it's a longer contract than I thought.
It was renewed a couple times, and then at the most recent Legislative Council meeting just a few weeks ago, they signed a new contract. This new contract was to provide those services for Medicare Advantage, the pharmacy benefits manager, as well as a diabetes management study or assessment that won't require necessarily an RFP. So this is a new contract with Siegel.
So the legislature hired a consultant and then turned around and hired the consultant. Okay, yeah, got it. Thank you.
Any other questions from the board?
But just to be clear, Jake, so we are only voting that they are going to assist with the RFP process. not the actual acceptance of those proposals.
Correct. And that's a great question, Cale, and it's something that we're obviously concerned about is, okay, who's going to be doing what? But we are going to be working with Siegel, where they have a lot of expertise in these other states, but we've made it very clear to them that it's the responsibility of EBD and ultimately the Board of Finance to issue these. And so we'll be playing a major role in all of it. We certainly look to benefit from all of Siegel's insight on all these things. We think that they have a lot to add. They certainly know a lot more than I do about how to do all this stuff, but it ultimately is still going to be our solicitation.
And are they going to score these in any way? Or they're really just facilitating the proposal?
So the state law lays out how the scoring works and who has to do all the scoring. A lot of that hasn't been determined yet, but we will be following how the scoring works. We'll be putting out an RFP, which will have proposals that will be solicited, and then those come back, they'll be scored. I'd also point out, as you probably are aware or getting to, the Board of Finance is specifically delegated with the authority to develop bid specifications, RFPs, and to evaluate those bids and proposals. So this will all be brought to you all for your consideration, your input at the appropriate time.
Any more questions? Good discussion. Thank you. May I have a motion for the approval of the memorandum of understanding with the Bureau of Legislative Research to utilize the services of Siegel Group?
Mr. Chair, I'll make a motion that we approve the MOU with the caveat that it does follow all state procurement law.
Very good. Second? We have a second.
Second.
Thank you, Commissioner Marshall. Any additional questions or comments? Hearing none, all those in favor say aye. Aye. Any opposed? Okay, thank you. Jake, let's move to the Health Advantage contract.
So the next item for your consideration is an extension of our existing contract with Health Advantage. You might recall over the summer, we extended our contract with Health Advantage for the 22 calendar year. As soon as that was done, we immediately started looking at 23. As we just discussed, we're going to be working with Siegel on some RFPs. We have a bunch of procurement and contracting decisions to get started on, which begin in calendar year 23. So we've been working pretty diligently here to get all of that lined out. Health Advantage is our primary third-party administrator, our TPA. They're really one of our closest partners, and they're an outfit that we've been involved with for a generation. When we began looking at the 23 number, though, the first question we really asked is for our actuary to help us get a handle on what kind of a relationship that is. A lot of times when we have long-term ongoing relationships, it's hard to gauge, is it a good deal for the state or not? And so Milligan sat down, and I've included their report in the documents provided to the Board of Finance, and did what they called a market check. The challenge with TPAs, of course, is that the number you're negotiating, the administrative fees, is not really the number that is most important. What's most important for us is the claims costs and the costs of the network of whatever TPA we're doing contract with. So we might be able to get a great deal on our administrative fees. We might get a really good deal on that. But if paying those lower fees gets us into a network that is more expensive, at the end of the day, we're going to be out more money. And where Blue Cross has really succeeded in over the years is having a very cost-effective network. Milligan confirmed that with their market check analysis. One of the things we looked at there is, okay, if we went with a different competitor, how much cheaper would their network have to be to make it worthwhile to go to an RFP? And I think that the analysis from Milligan really confirmed that the smarter move for us, for the standpoint of the taxpayers, is to go ahead with the extension proposal from Blue Cross. Blue Cross has proposed a 5% extension that would take us from an administrative fee standpoint to $23.64 per PM. Just for some perspective, they were at more around $26 or $27 PM just a few years ago. So we think this is very competitive. And if that allows us to gain access to the Blue Cross network, we think that's going to be the best option we would have, even if we went to bid. The other reality is that if we had gone to bid and had changed TPAs, that would cause a significant disruption for our members, and it would be a big lift for the administration. I've got Max Greenwood and Jason Treese from HA. They have joined us on the call, so they're available to answer any questions. And with that, I would ask approval for the extension of the contract.
Thank you, Jay. Do we have any questions concerning the Health Advantage contract extension? Good. Well, hearing none, that I would entertain a motion for the approval of the extension. Kind of got a bashful group here today.
Make a motion.
Thank you. Do I have a second?
I'll second.
All right. Thank you, Secretary Fetcher. Any additional comments? Excuse me. Hearing none, all those in favor say aye. Aye.
Aye.
Any opposed? Okay. Jake, I think we have one more issue that we need approval from the Board of Finance on, and that has to do with the extension of the $20 dispensing fee to pharmacists for the COVID antiviral drugs.
Yes, sir. Thank you to the board members. So the Arkansas Pharmacy Association, and John Vincent is on the call listening if anybody has any questions on this. The Arkansas Pharmacists Association approached us with a request to increase our dispensing fee for the dispensing of a particular type of antiviral COVID-19 drugs. Currently, we pay $1.50 for the dispensing fee. These drugs are being provided to pharmacists free of charge by the federal government. And so as a result, the pharmacists are not, these drugs are kind of coming outside of the normal line of business. The pharmacists are not therefore making any money on it. Instead, they're getting paid $1.50 to dispense what is a pretty important new medicine that is pretty labor intensive for the pharmacists to dispense. We looked at the issue, our partners over at EBRX looked at it as well, and we think that it would be appropriate to extend a $20 dispensing fee for these drugs to the Pharmacists Association in response to their request. At some point in the future, I would like to revisit this. My concern with all the COVID issues is, of course, we adopt measures in the expectation that COVID is going to be a short-term thing, and then it turns out not being a short-term thing. And at some point when these drugs do enter the formularies of major manufacturers, when we start covering them like every other drug, I'd like to revisit this issue. But for the time being, I think that this is appropriate. I also am pretty confident that when it does become a normal drug, when it does enter the formulary, the plan is probably going to end up paying a lot more than $20 to issue these drugs for individuals who need them. So with that, I would ask approval from the board for this $20 dispensing fee.
I have a question, Mr. Chairman.
Please go ahead.
This is a big jump from $1.50 to $20, and what's the hit to the system would be my first question.
So that's kind of hard to gauge because these are new drugs, but we don't have a lot of track record on it. But right now, we don't anticipate this will be a major burden on the system. These are relatively new. They're relatively specific in their application. These are not standard drugs that everybody's going to be taking. John, I think, can probably provide some more feedback, as can some of the other members in the DUEC on this issue. But my expectation is that we're not looking at a major hit.
When I'm reviewing the letter, when did you expect this to take place? When did this start?
We would need the approval of the Board of Finance, and once the Board of Finance was able to approve it, and then of course, we'll have to go through ALC on that. But once that's approved through ALC, I would imagine that we would move forward with that fee.
So you're saying the increase in funds has to go through ALC?
Yeah, Act 1004 has very, very, very broad language, making it clear that any commitment or actions or decisions by the Board of Finance would go through ALC for their approval.
Okay, so if we approve it today, we're looking at ALC won't meet again until April?
Or the Joint Budget Committee would consider it during fiscal session.
Is there any federal money available for this, Jake, or this is all gonna be on the state?
This will be on the state. The drugs are being provided free of charge to the pharmacists. So the feds are already making it clear to us, are making it free. Now, that's a good question, Cale, and it's one that we could probably dig into further. But our attempts to get federal dollars to support the plan have struck out. We've been pretty consistent in trying to find ways to do that. And so far, we've not found any.
I think from DFA's point of view, we'd be happy to work with you on that from the standpoint of federal money on the funds we have available for COVID right now. The other question I have is, are other insurance plans doing something similar to what we're doing here?
Yep. So the EDRX group, who also provides to us, but to the ASU plan, the U of A, the Municipal League, and others, they provided the same recommendation of $20 to those plans. ASU is also at $20. I think Blue Cross is at 10, and the U of A system is at 15.
Okay, thank you. Are there any more questions from the board?
Well, yes, what was the logic in them not going up to the full 20? I mean, $1.50 to 20 is a big jump. And you just named one of the systems, I didn't catch it, that only went up half as high. What's
U of A went to 15. I mean, it's all kind of a question on handicapping, and John could probably provide some feedback on this too, but it's all a question of handicapping the time and the cost to the pharmacist to provide these antivirals.
And I get where you're coming from. As a Board of Finance member, I have the hat of a fiduciary.
Absolutely.
And that's where I'm coming from. So yeah, I'm sorry I interrupted you, Mr. Vincent. You wanted to say something.
I was just going to say, like, we have never in our history, in our lifetime, been through a pandemic like this, or even a situation where a drug has been purchased and then pharmacies have been asked to dispense it without any model of what that would look like in terms of what the reimbursement would be. You know, Arkansas Blue Cross Blue Shield and CVS and others, there really wasn't any conversation with the pharmacists themselves as these reimbursement models have been rolled out. They, in fairness to the plans, they didn't have any guidance from CMS. CMS had given guidance on every other therapy. So like when Regeneron, which is an injectable drug, CMS set a benchmark. And for Sotrovimab, they set a benchmark. For Evusheld, they set a benchmark. And for these oral antivirals, they did not do so. And CMS referred to what's called a non-interference clause. So just like the plans, the pharmacies themselves are learning, you know, as they go along. And we've had members, I know there's over 100 pharmacies that now have these products, but there are 750 pharmacies in the state. And I have gotten emails and text messages from dozens of them that have said, I can't provide this service if there's not a business model that supports it. And that's unfortunate because these drugs reduce the risk of hospitalization and death by 90%. So we need a business model to support providing a drug therapy that reduces hospitalization and death for our Kansas, especially as we approach, you know, almost 10,000 lives lost and 1 million Americans' lives lost across the country. So that's what we just went back and studied, worked with the National Community Pharmacists Association to see how much time is being taken. Right now, it's around, it can be from 30 to 45 minutes. I think with time, we'll get more efficient with it and the cost will come down. But initially, it's time consuming, and we had estimated the current cost is about $30 to $40 to provide these services for a pharmacist, but we think they'll get more efficient with time.
Thank you. Are there any more questions?
Yes, Mr. Chairman, Dennis Milligan here. Jake, what other states are doing this? Do we have any line on any other, if you will, best practices or anything like that that are occurring?
I think it's kind of all over the map. And it's very similar to kind of what we're dealing with here. And like John said, in the past, when we've had COVID-specific drugs or therapies that have come out, CMS or the feds have made recommendations. There's been some kind of guidelines or rules that we could follow. In this case, they haven't done that. And so we've really been trying to figure it out. We waited for some time for our PBM Med Impact to provide some guidance. They did not do so. I think nationally, this is an issue that all the states are trying to feel their way through on.
There was an article in Axios News just today, like it's making its way into the national news. Just FYI, for those of you who read Axios.
Thank you. Yeah, we need to remember this is for the employees of the state of Arkansas and the retirees. And so we want to, it sounds to me like this is something that will be of great benefit for those who do have, who do test positive for COVID. And it's kind of like, good or great healthcare for our population. Any more questions? Hearing none, I'd entertain a motion to approve. Please.
Mr. Chair, I'll make that motion.
Thank you, Commissioner Marshall. And a second?
I'll second.
Thank you, Secretary Fetcher. All those in favor say aye. Aye.
Aye.
Any opposed? Well, I appreciate your indulgence, and the meeting is a little longer than we normally have, but I guess with the EBD addition to the Board of Finance, we'll probably have more and more of those as we go along. I know that we've already had that through 2021. Is there any additional business that any of the board would like to bring before the board?
With the chair's approval, I'd just like to say thank you to the board for sitting through all of that. And as much as I hate to say it, we will probably be revisiting these issues as they evolve. I'll be providing additional information through Grant and Autumn at the Treasurer's office. But again, thank you. I appreciate it.
Thank you, Jay. Our next meeting will be May the 10th, 2022. Seeing no further business, I would say this meeting is now adjourned. Thank you all. Thank everybody for being.
Thank you.
Thank you, guys and ladies.
See you, Chairman.